Forget the credit score myths and marketing gimmicks. Is an 800 credit score even attainable for mere mortals like you and me? Or is it just some sort of pipe dream to keep chasing for the rest of our lives? Today, we're separating fact from fiction. We'll be uncovering all the credit score myths, exposing the hidden hats, and giving you actionable steps that you can take to raise your current score from whatever it is up to the coveted 800. To keep our conversation as simple as possible, there are really just 5 main factors that you have to understand that make up your credit score. I like to remember what they are with the acronym FIRLAMENA. PH stands for payment history, which makes up 35% of your score. UR is utilization ratio, which is 30% of your score. LE stands for the length of credit history, which is 15% of your score. MI is your midst of accounts, that's 10%. And finally, we have NA for new accounts, another 10%. Let's start with payment history, the #1 factor making up the bulk of your score. Here's how it's defined directly by Experian. Payment history refers to how you've paid your bills in the past. Whether you've paid on time or late, or missed payments altogether, is a very important category of your credit data for the FICO credit score. The more severe, recent, and frequent the late payment information, the greater the impact on your FICO score. So how do we go about avoiding all this negativity on our credit reports? Fortunately, it's very simple to do. Here's a picture of an actual credit card bill of mine from my Chase Freedom Flex account. I've got a new balance of $2,234.27, a minimum payment due that is for $40, and my due date for this bill is January 1st, 2024. Now pay very close attention here. You're only required to pay this, that is the minimum payment due. If I pay that $40 off by the 1st of January, which is my due date, then I will have been given an on-time payment, and that will help my credit score. However, because I'm only paying this small amount of my total amount that I spent, over $2,200, I will be charged interest, therefore hurting myself financially, even though that won't necessarily hurt my score. So the better question here is, how do you stay in control of your finances and work toward that 800 credit score? Well, you want to pay this amount, that is your new balance, the total amount of money that you actually charge to your card, and you want to pay it on or before this date right here. So since my due date on this card account is the 1st of January, it's actually the 1st of every single month, I want my payment history to look exactly like this chart that you see here on the screen. Every single month for the entire year, I want it to be paid on the 1st or any time before that. So some suggestions for the payment history part of your score. You want to pay all of your credit cards, loans, etc. on time. That is on or before the due date on your bill. Ideally, pay the full amount, but just realize that only the minimum is actually required for the on-time payment to be registered. And third, do this consistently over the long term. Now, to make this video way more interesting, we're actually going to refer to a really cool study that was done by LendingTree as we move along here. They looked at 100,000 different users and their credit reports with a credit score of at least 800, which was the minimum score in this case. Pertaining to our current focus of the payment history factor, they found that 100% of their sample size from the LendingTree users with a credit score of 800 or more paid their bills on time every single month. Let's move on to factor number 2, the utilization ratio, which we can also call the amounts owed or the amount of debt that you have. Here's how Experian defines this one. The amount of credit you're using is a very important category of credit data for the FICO score. FICO scores consider the total balance owed, how many accounts have balances, and how much of your available credit you're using. So what is this utilization? Why is it important? And how do you even calculate it? Well, let's use the same amount from my Chase Freedom Flex statement that you saw earlier. I had here for scenario A, a balance of $2,234.27 as my balance. Now let's assume my credit limit was $4,000. I would divide my balance by my total limit, and that would give me the actual ratio. You have some sort of decimal point. But to make it easier to talk about here, if you multiply that result by 100, that gives you the percentage here. So doing this shows a 56% utilization, which is not good for your credit score. Fortunately, my credit limit was not $4,000. Rather, it's $10,000. So let's see how that changes the equation here with my real actual situation. So scenario B, same account balance, you saw my bill earlier, but now we divide it by my actual $10,000 limit. Multiply that by 100, and now we have 22% for the utilization, which is much better for the credit score. The question now becomes, what is the ideal range to be in if you want to maximize your score and continue working toward that coveted 800? Well, a good score here would be found if you keep your utilization under 30%. And if you want to reach the greater scores, you would want to be under 10%. The smaller it is, the better it is. And this is also going to be per card and across all cards. Now for some helpful tips about the utilization. The first 2 points we just covered, but I'm putting them here on the screen again for you to have like a little bit of a cheat sheet here to refer to in the future. You want to stay below those thresholds to maximize your score and work toward an 800. Now for step number 3 here, to basically satisfy staying below those percentage thresholds, you can either stop using your card once you hit that target utilization, or you can keep using your card however you like, but just make an early payment to bring your balance down to the target utilization before your billing cycle close date. In other words, before you get your bill. And then do a second payment to pay off your bill, which had the remaining balance, back down all the way to 0. I realize some of you out there may have questions about when to pay your credit card bill to maximize your credit score. That's a whole separate topic that will be dedicated for a separate video here. So I've done an older video on this topic. Feel free to search for it after watching this one, but I'm even considering doing an updated, simpler version of it pretty soon here. So also consider subscribing to this channel if you want to be notified when that new version goes up. Then fourth here, as a bonus, you can always request a credit limit increase or even move credit from a different card that you already have from the same bank. Looking back to that study of 100,000 different credit reports by LendingTree, they found that those with credit scores of 800 or higher had their average utilization about 6.1%. Credit factor number 3, the length of credit history, also called the average age of accounts. Here's what Experian has to say about this one. FICO scores take into account how long your credit accounts have been established, including the age of your oldest account, the age of your newest account, and the average age of all of your accounts. Warning, the following exercise can be very eye-opening for a lot of people, especially once we get to the part of canceling a credit card account and the effect that can have on your score. First here, how do you calculate your length of credit history on the average basis here? Let's say you have 4 credit card accounts. One is 5 years old, the other is 4 years old, and then a couple more at 2 years, 7 months, and the other at 4 months respectively. So to basically make this easy and put them all in the same terms, we'll convert it all to months first. So now we just add all that up together and we have basically 143 months. And we divide that by how many cards we have. That is 4 cards. So 143 divided by 4 equals 35.75 months for the average age. And putting that into a much easier to digest yearly format, we take our 35.75 months and divide it by 12 months in a year to give us 2.98 years for our average length of credit history. But what would happen if we close one of our card accounts, specifically the youngest one here in yellow at just 4 months? Well, the numbers in the equation would have to change. We now have a total of just 139 months across our other 3 cards. So we take 139 divided by 3. We have 46.33 months now as our average age. Converting that into years, it now went up to a much longer 3.86 years. And what if instead we close out our oldest account, which was the one in blue here at 5 years old? We now have a much lower 2.3 years for our average length of credit history. The main takeaway here is don't be afraid to close a card account if you need to for whatever reason, but also strive to keep them open if you can. So here's some more helpful tips. How to work toward that 800 score here with your length of credit is 1, to keep your oldest card open long term. If it has an annual fee and you no longer want the card, consider a product change. In this case, it would be a downgrade to a lower fee card or a no fee card. Number 2, keep all of your cards open long term if it makes sense to do so. That is, if it's easy for you to manage multiple cards, if they all have no or low or at least justifiable annual fees, then it can make sense to do so. But again, if you have no downgrade path, you're stuck in these annual fees, it's costing you money. You know what? If you need to cancel, go for it. I actually had my own oldest account closed because I wasn't using it enough. So unfortunately, there was no way for me to open it back up. So having lost my oldest card, I still survived it, and so did my score. Number 3, to avoid what happened to me, use all of your cards at least, I'd say once every 6 months on average, just to keep them active. It can be a small purchase that you pay and then pay off when you get your bill. And then number 4, be patient. Time needs to pass. It's not often that I tell people to do nothing as part of a strategy, but in this case, it's the perfect thing to do, and here's why. Referring back to that LendingTree study, they found that the oldest active account for those with an 800 plus score averaged nearly 22 years in age. And that was even a significant drop from the previous data that they had from 2021. Back in May of that time, the average oldest account was more than 27 years. And actually millennials, despite being older than the Gen Zers that they examined, they now have the smallest average age at less than 15 years. If you're wondering why I'm only at a 770 and not at 800 yet, it's a big part because of this. Factor 4, the mix of accounts, making up 10% of your credit score. Per Experian, FICO scores consider the different types of credit accounts being used or reported, including credit cards, retail accounts, installment loans, and mortgage loans. Your credit mix will be more important if your credit report doesn't have a lot of other information to base a FICO score on. So for me, my mix is actually not very mixed. It's pretty much all credit cards for my active accounts and then a couple auto loans over the years, which again aren't really even active anymore, but they're still being factored into my score. So just realize that because I have so many credit card accounts, there is a good deal of information on my report to still hold my score at a very high 770 right now. But if you've got a thin file, maybe 1 or 2 cards, not very old, but you have other products, those other products can help you out as well. Here are a few examples of other installment loans that can be on your credit report and boost your score. Auto loans, student loans, buy now, pay later types of payment plans, personal loans, credit cards as we've been talking about, and of course the mortgage. As for my suggestions here, get the credit cards and financial products that you want/need, and don't get financial products you can't afford just to increase your credit score. Per the LendingTree study, consumers with 800 plus credit scores have an average of 8.3 open accounts, which was about 7.9 in 2021. That does not necessarily mean that you have to go open up 8 accounts to go get your 800 credit score. That was the average of that study. People had more, people had fewer. The most important thing again is to get what you need and be responsible with those products. And our 5th and final factor is new accounts, again making up 10% of your overall credit score. Experian says that when considering your amount of new credit, FICO scores take into account how many new accounts you've recently opened and whether you've been rate shopping for a single loan or applying for multiple new credit lines. Opening several new credit accounts in a short period of time indicates greater credit risk. For a few quick tips here to make sure that your new accounts section of your report is looking in great shape, you want to avoid hard inquiries. That is, stop applying for new credit cards and other financial products. Also, stop opening new accounts. And third, allow the prior hard inquiries you already had in your report to fall off of that report. They'll have a 2-year lifespan. One of the key findings from LendingTree's study was that the Americans with those high scores of 800 and above are limiting their credit card inquiries. In fact, the average number of inquiries was 1.8 in the past 2 years. Pay your bills on time, keep your utilization down, build a long credit history, keep multiple accounts in good standing on your report, and don't open up new accounts too often. And of course, subscribe to this channel to learn more about great credit card tips as you go along with your journey. Do those things and you'll be well on your way to getting that 800 score in the long term. You can do it. With all that said, if you enjoyed today's video and believe it could benefit other people, then please help me get it in front of them by giving this video a like to tell YouTube to push it out to more people. Also, check out the links down below in the description area to earn some more cash back when you shop online through Rakuten, and to view my site with some great credit card offers that I've organized into different categories to help you find the cards that you like best. I hope today's video brought you some great value, and in case you're looking for more videos like this one about debunking myths or explaining credit card concepts and how your scores work, check out my Credit Cards 101 playlist, which explains a lot of great concepts to help you along your journey to maximize your score while being financially responsible. Which video will I see you in next? The choice is yours.